So the reason I'm able to hold on to these two winning positions for this particular strategy through almost the entire day is because of backtesting, showing me the potential profit, the success rate, and what happens if I hold it overnight. And don't worry, I'm going to walk you through my backtesting process later on in the video. I decided to backtest my favorite trading strategy for over 8 years. The result was beyond my imagination. I never truly understood the benefits of strategy backtesting until I actually took it seriously a couple of months ago. In this video, you're going to learn about how backtesting improved my trading performance, the statistical win rate, average risk, and profitability of my favorite trading strategy, and how to backtest your own trading strategies using a simple tool using AI and data. Before we dive into my own trades, here's a quick clarification of how you can tell if I was trading on a real-time margin account or a demo account. Okay, now, if you're serious about becoming a better trader, then make sure to like this video and get ready to take notes and ask me any questions about backtesting you may have down below. If you're a long-time viewer, then you've already seen my previous live trading videos on my go-to strategy, the gap up reversal long. But let me quickly review with you the main criteria that I look for to trade this particular long strategy. Number 1. Essentially, I'm looking for large cap stocks that gap up at least 5% during pre-market. Number 2, they must have bullish news catalysts leading to high pre-market volume as well as the overnight gap up. Number 3, I want to see a retracement after the open in order for the stock to perform a reversal to go long. And number 4, the plan is to join the bounce back to highs or even new highs of the day. These are the two trades I did on gap up reversal longs recently on Nvidia and Crocs, the ugly shoes. I made a total of 6,200 on Nvidia and 1,600 on Crocs. And I also took some remainder positions to long overnight to sell into the next morning spike. And now here's a live trading recording. So you can see Crocs pre-market is now at the open 932, immediately jumps to like $99. So you're not getting much retracement, not yet anyways. So you can see I got in a starter position of only 150 shares on Crocs on the long side at around $98. But the idea is that if it pulls back to like $96, I'll be very happy to start adding some real position because 100 shares is not like a significant amount. So you can see about 5 minutes later, I added a little bit around $98, thinking that we're gonna consolidate and hit to highs. Then you can see this thing is starting to pull, right? All the way down below that yellow line, which is VWAP. I now have 420 shares, 420. But unrealized $500, which is okay, but at this point it starts to look a little heavy, so you're gonna see me trying to get out all the position first, and in case it gets to that $96, I wanna actually go long and build a position from there. So you can see I took that loss at earlier at $96.80, so I took a loss, realized about $760 loss. That's a starter position for me. I'm very comfortable risking that amount in the beginning. But you can see, I almost stopped right at the bottom. You can see the stock is immediately trying to bounce now. That's why I saw it. I'm like, oh no, did I just stop out too prematurely? And it didn't pull back to $96 at all. So you can see I got back in with 300 shares starter at around VWAP area at 97.90s. Added some more, 400 shares at $98. That gave me an average of 98. You can see very strong on the 5 minute and 2 minutes. We're getting bought back up really, really quickly. So you can see the stock is now testing the higher day, almost $100 area. I added some more up at highs. Again, I only add a small amount up here because, it's a higher day. I don't want to get faked out. But the stock is still remaining extremely strong. You can see now we are at unrealized about $600, $700, $800, testing that $100 mark. So you can see I'm holding through the pullback. On the 2 minute, small pullback here, still fine, I'm still holding on. See, I want to see it test that $100 5-minute psychological mark. So if you look at daily charts, you got room after that $100 mark all the way to 102 and potentially higher. So that's the reason you want to try to maximize that profit. So I sold a little bit at 101. So fast forward, you can see the stock, just being kind of slowly pulling back, consolidate and head back higher. In the past, it's very difficult for me to hold on to these winners, but I've definitely improved my patience a lot. First, understanding the strategy inside out, knowing the perfect environment for it, identifying the potential profits on the daily. We have upside to 102, 105s, and also backtesting helped a lot as well. It's from testing this particular strategy, I know that after 10 o'clock, if the stock is at new highs above pre-market highs, then you have a lot of upside. You can see I'm going to try to scale a little bit at 102. So I went from being red $800 on CROX on the day to now positive 1100. And on the top, you have NVIDIA. So a very similar setup as well. Again, you're now through that daily resistance and you have positive news for NVIDIA as well as Crocs. And if you look at the chart, also above pre-market highs, also after the 10 a.m. mark that we talked about. And from backtesting, once again, after 10 a.m., if the stock is still uptrending, you got some decent upside daily chart, you have decent news, catalyst, usually you see another higher day after that 10 a.m. mark. And NVIDIA is technically making new all-time highs, so there's no clear resistance on the daily chart. So that's the reason I want to try to stay as long as I can. And while it might be difficult to sit through these pullbacks and consolidate and when the stock slowly grinds up, that's when you know you are in a winning position and you want to stay longer. Remember, I also mentioned in a previous video that this year, just like last year, I want to focus on maximizing profits and maximizing how long I stay in a trade. And backtesting definitely helps a lot. So I just locked in all of NVIDIA at 512. Locked in about $2,000 on NVIDIA. Nice little day trade. That's from getting in at 509. Rolled it all the way to 512, 515, 513. And the Crocs, I'm still in the 100 shares remainder. And that's in from $98. So I've held it all the way from $98 to through 103s. So fast forward here, you're going to see I'm trying to sell the remainder 104 on CROX, realizing almost $1,300 on this particular day trade. So really quickly, at the end of the day, you can see NVIDIA actually got back in the middle of the day, sold some into the close from 517 to 520s, locking in a little bit more on the day trade, and I swung some position overnight. So the reason I'm able to hold on to these two winning positions for this particular strategy through almost the entire day is because of backtesting, showing me the potential profit, the success rate, and what happens if I hold it overnight. And don't worry, I'm going to walk you through my backtesting process later on in the video. If you're enjoying this trade commentary showing you my strategy and executions, make sure to drop a like down below. I really appreciate it. The most crucial factor for these two gap-up reversal long setups to develop into overnight swing trades is the confidence I have in my setup and the conviction from data. And I'm not talking about being confident in a strategy just because you picked it up from a YouTube video or TikTok video. I've been trading this strategy and variations of it for over 8 years now. I've been journaling my executions and all the mistakes I used to make. And most importantly, I've run multiple years of backtesting on this strategy. The spreadsheet that you're looking at right now is one of the annual backtesting results that I exported from an AI backtesting tool, Spikeet. So allow me to simplify things for you here. And if you're just like me, I get very dizzy whenever I'm looking at numbers and spreadsheets that are all over the place. This is the very advanced backtesting platform on Spikeet. So in order to backtest the strategy I just talked about, gap up, reversal long, and find out how it would perform historically speaking based on stats and data, here's what I did. So the data scan I ran was this one. You can look at my criteria. So this is a criteria for this data set. Remember, I'm trying to look for stocks that will fit the criteria for this particular strategy. So on this scan, I'm looking for stocks between $3 to $90 because I know you guys generally trade around that range. You don't like to trade stocks like Nvidia above $100. I'm looking for stocks that have news on the day and market cap above 500 million. So that will include some small portion of small cap stocks. Now, the custom here, I'm scanning for stocks gapping up above 8% on the day. I'm also looking for stocks that's gapping up. The open is above yesterday's high, which is resistance. Then I'm also looking for pre-market dollar volume of at least $1 million. So just to make sure that there's enough interest on the day pre-market for this gap up. So after the criteria of the strategy is set here in the filters, in the columns is where I ask for specific data. So basically data is a really fancy way of saying all the values pertaining to what you're looking for. It can be technicals or fundamental values for the stock. So I'm looking for the closing price, the open, volume, and date, and obviously ticker for the stock. I'm also looking for higher day, lower day, pre-market lows, pre-market highs on the particular gap up day. I'm looking for lows in the first hour for my ideal entry. I'm looking for 10:30 price, 11 o'clock price, 12 o'clock price, because those are going to be my potential take profit. And very important, this is a feature I really love about Spikeet. It's able to find the time of the lower day and time of higher day. So from that data, you can analyze any patterns on how to pick the reversal spots on the stocks that you're trading. Remember, you're trying to pick a reversal near the lows to go long, to go back to highs. So this is very, very strong and very powerful platform. So after that gave me all the data here. I'm only using 2023 data to speed things up, but I run this data through at least the last 5 years. Okay, you can see this is a data set that Spikeet gave us. And all the different data you have on the top. Again, the one we mentioned earlier, the time of higher day and time of lower day, this is very, very powerful and very important for trying to time the bottom to long reversal. Now, so the first things first is it gave us a total of 504 sample size from 2023. So first things first, I want to analyze when the lower day is formed and try to find out if we're able to time an entry from the lower day data, time of lower day, if there's enough upside after you found an entry. So I sorted the entire data set of 504 sample by the lower day timing, the time the stock makes the low of the day. So I sorted it, and my first realization is that you can see, this is 9:30, all the way, you get 10 o'clock, 10:30. So 300 out of the 500, you're gonna see a lower day by 10:15. And if we look at, all the way here, right, even more, by around 10:30, 317 of them. So that's when I realized out of all that sample, about 60% of them will have found the lower day by 10:15, which aligns with my normal entries on all my previous videos. Usually to trade this strategy, I would have entered, if the stock is going to succeed, I would have gotten in by this time. So that's great and all. Now, next I want to know how many of these stocks that qualify, the entry by 10:15, they continue to make new highs, just so you know if there's enough upside to go higher. So what you want to do is next to find out if the higher day is after lower day time. So the formula is time of higher day You're trying to find out whether time of higher day here is bigger than the time of lower day. So I did that, and I did all the calculations here. About 240 out of 300 does go higher. So 80% of that goes higher. So from that, you can start painting a picture in which you first find the qualifying stocks that fit the criteria for this setup. And your entry is most likely going to be the first 45 minutes. And out of that, 80% of them will continue to make new highs. You following me here? If you have questions, you can ask me down below, but keep on following. I know it's a little bit confusing, but data is actually, it starts getting very interesting the more you analyze it. So I want to know if we can find the first entry and hypothetically use that to see what the profit and the risk looks like. So if we go to this tab, this is a tab I was testing out all the entries. So remember, Spikeet gave us the data for the low in the first hour before 10:15. So this is going to be our hypothetical entry. So I want to know how many of these low of the day before 10:15 is greater than pre-market lows, because I'm going to use our pre-market lows as the risk. So that's going to be red. This is entry. This is the risk. So I'm going to find out what the risk and the profits look like. So how many of the low in the first hour is greater than pre-market lows? I'll show you the success rate of the strategy, how many times you'll get stopped out or not. Then I have the risk. So you can see your risk is pre-market low minus your entry and the risk percentage. So from here, I put them all here. Then I got an average of if we're entering the first hour of the day and risking pre-market lows, on average, 74% of the time. So remember, this number is whether your entry in the first hour is greater than pre-market lows. So 376 times out of 504, that is going to be true. So that means you do not get stopped out. So that means your success rate is 75%. Now, out of that, your fail rate is 25%, and your risk on average is $1.20. And on average, that risk is going to be 5.7% of your position. So next, we do the same with different profit targets. So I don't really have a way of figuring out what a potential profit target is like, because like I said, as the demo earlier showed, I'm just using all the different daily resistance levels. So I have hypothetical targets at 10:30, 11, 12, and obviously if we're able to time the higher day, what that would look like. So these are all calculated from this spreadsheet over here from 10:30 all the way to higher day. This is where the profit target is calculated based on your entries at the lower day within the first hour all the way to 10:30, 11, 12, and higher day if you're able to time the higher day. So what would that look like? That means you can on average make $1.10, $1.13, $1.26, and if you can get to the higher day, you'll get $2.58. And these are different percentages. Not bad. A lot of these does not equate to 1-to-1. But once again, pre-market low is your ultimate risk at the very bottom. Ideally, you want to do what I do, which is once you get an entry, you move your risk up. So your risk is not always going to stay at pre-market lows. So even though this risk doesn't look like it's worth the risk reward, as long as you move your risk up as the stock goes higher, then hypothetically, you'll never lose this amount once it starts working in your favor. So next, I would just want to test out another entry point. Let's say hypothetically, we get in no matter what at 10 o'clock. So a different spreadsheet here. You can see entry at 10 o'clock. What would that look like? The risk is now, as you can see, 10 a.m. price and the difference between 10 a.m. price and pre-market lows. So that's a new test that we're doing here. So this is a new risk per dollar. This is a new risk percentage. And these are the different profit targets. 10:30, 11, 12, higher day once again. So let's see how much money you can make at all these different price points, risking pre-market lows. So over here, you can see the success rate has actually increased even more if you just wait till 10 o'clock to enter. Your success rate is now, 444 times out of 504 you'll be successful, risking pre-market lows. Your success rate is 88%, which is really high. But at the same time, your risk reward dropped even more. Makes sense, right? Because you already missed a big chunk of that reversal point all the way till 10 o'clock. So your fail rate is now less than 12%, which is really low. On average, you're still risking about the same, $1.19, same amount of risk, that makes sense. But your profit target, your profit potential has significantly dropped to 4 cents, 6 cents, 8 cents, and $1.55. So what you've seen so far helps so much with the strategy execution on the day trade. That's the reason, as you saw earlier, I entered around 10 o'clock or earlier, and after 10 o'clock, and I want to let the position ride out according to all the data it showed me. But the second part is I want to know how many of these actually, have a gap up overnight. So what I did is I go back to the spreadsheet and I look at how many of these gappers within the first if I find an entry within the first 45 minutes, how many of them close green on the day and how many of them close green the next day, and by how much percentage. Remember, one of the data we got is the next day, what's the gap up percentage overnight. So this is a percentage, okay? So from here, from extracting that data, we found that whether it's a potential swing overnight, this is only if on the first day the stock closes green, can the next day also being a green gap up as well. So 80 out of 222 occurrences, because only 200 of them close green on the first day, 80 out of 221, that's 36% of them will gap up overnight. It's not exactly high, but the next day, if it does gap up and close green, what's the average gap percentage? So next day, you can see up to around 2 to 3% overnight gap. So from all these data we gathered, if we do a rough expectancy of the strategy, you can see that if your entry is you are entering within the first hour of the day, using what we saw earlier, if you use this particular entry, you'll be right 75% of the time. And these are the potential average profits if you hold to 11 or higher day. And this is the loss if your set profit, your set risk is at pre-market lows. You'll fail this number of times and your average risk is 119. So taking that into consideration, hypothetically, let's say you always trade with 100 shares. Your profit per trade should be, 113 on the first price target, and 258 on the second. And on the year, with these amount of sample sizes, this is the potential you could make, either 42,000 or 97,000, and your loss will be around 15,000. Now, this is only if you trade consistently 100 share lots. Let's say you trade 500 shares, this is what the numbers will look like. Quite impressive. Again, this is only if you always keep your risk at pre-market lows. Like we said, you can improve this by moving your risk up so you don't always risk 1-to-1. And also your profit target, you want to sell into the daily resistance. So you're not always selling right at 11 o'clock. And if you always have 1,000 shares, this is what it will look like. I ran this data for the last 5 years and I've gotten similar results. Again, Spikeet is a very powerful tool. Again, just this function of helping you find the average lower day and average higher day, it's very powerful. Whether it's on my large cap strategies or on your other strategies, small cap, large caps, it can be very useful. You can try out Spikeet for yourself too. I have a code down below for 10% off premium tiers, and they also have a free trial as well. Try it out for yourself and see if it helps your strategy. Essentially, it's from a lot of the data you've seen today that helped me make decisions when I'm trading live. This is where I decide on my potential entries around or before 10 o'clock and I add on the way up because the stock is likely to make new highs. When it comes to taking profits, I'm more discretionary. Instead of just selling at the set time we saw earlier at 10:30, 11, I sell into the daily resistance and I look at how much more room it can go. As for risk, I don't always set my risk right at pre-market lows. I will set it as a beginning, but I'll always move it up, essentially reducing my risk on the way up as I go. This helps to improve my risk reward, so it's more than just 1-to-1. Don't forget to try out Spikeet for yourself. I'll leave the link to the trial and discount code down below. If you want to learn more about this particular strategy, the gap up reversal long, then you can check out these videos over here.